folks on the side and in the front, Anirudh, Mandir, Siddharth, if you could have you seat, please. Please take your seats. Thank you. We'll start off with the session now. Thank you. Folks on the side as well, thank you so much. Thank you. So here we have Preqin giving us an outlook for 2023, and some of the details in terms of those presentations are that, private capital, folks, investors across the world, large pension insurance companies have moved towards the private capital ecosystem. Although geopolitical risks, recessionary environment, interest rates, lack of liquidity, all of this has affected the asset class. But at the same time, private capital AUM is growing and is, I think, projected to grow to about $7 odd billion by 2027. We are sitting on a good amount of dry powder as well. So from those perspectives, I would really want to invite on stage now to present in front of you Geetanjali Bhalotia, SVP APAC Research for Preqin, and present to us what would be the outlook for 2023 and the aspect for India in terms of this outlook. Thank you so much. Geetanjali, can we have you?
Thank you. Thanks for the introduction. So I don't know which one is the worst session, the session right before lunch or the one right after lunch. I'll try my best to keep all of you awake by sharing a lot of data and making it interesting. I call myself a data geek, and I'm really a strong advocate of data-driven decision-making. Because of that, I'm quite proud of our association with IVCA as data partners. So between yesterday and today, we have heard a lot of themes around what's happening in the market. In the next 20 minutes or so, what we will do differently is to substantiate those themes with data that Preqin has and talk about private equity and venture capital markets in India. We were founded in 2003, so this is a special year for us as we celebrate 20 years in business, which is 20 years of servicing the alternative asset communities with data, with analytics, and with insights on the private markets. Truly a global company. We have offices across 16 locations, and why 2023 is special for us is also because just this week, we have officially opened our first office in India, in Bangalore, a testament to our commitment and confidence in the region. Okay, let's start with looking at the overview of private capital markets in India and in Asia, actually. As you can see on the screen, it's $2.6 trillion in size, and which is dominated primarily by venture capital with about 46% market share, the orange part of the pie chart, and private equity with 37% market share. For India, now going to the chart on the right, the share is 40% for venture capital and around 20% for private equity. What's worth noting is, and I've seen a lot of optimism or enthusiasm about the market in India over the sessions in last 2 days, is the growth that we have seen in the alternative assets market in India, which has grown by about 15% CAGR over the last 5 years and reaching an all-time high of and crossing a $100 billion mark as of June 2022 AUMs. Coming to the fundraising now, as you can see, in 2021, pretty much all the asset classes were able to raise more capital than the previous year. And that was driven by near zero interest rate, which stimulated the business growth and the positive sentiments in the public markets made a stellar recovery post-pandemic. We then crossed over to a very different environment going into 2022. Some asset classes were impacted more than the others. As you can see, quite a noticeable contraction in private equity and venture capital fundraising, which is the black and the pink bars at the bottom, whereas private debt and real estate, which is in purple and blue, they were able to raise capital similar to the previous year. If we look at India, however, it's a different story. India has seen relatively stable fundraising over the last few years, referring to the chart on the right now. The decline that we saw in 2022 was marginal as compared to Asia-Pac or even global markets, so to say. We did see a significant drop in private equity fundraising, though, which dropped by almost 50%, and I'm finding it difficult to see the chart from here. I think it's the bottom part, which is in black or dark blue. What we also saw was venture capital funds. They compensated for that decline, and they were able to raise close to 20% more capital in 2022 as compared to 2021. So it clearly is a fact that India continues to be an attractive market when it comes to venture capital, and we will talk about it in details during the presentation. So throughout this presentation, we'll be touching on some common themes that have led to the overall slowdown in the market, such as high inflation, rising interest rates, which have impacted the valuations as well as liquidity in the market, weakening deal flows, and we heard a lot around the exits and why exits are so important to the investors, and we have seen an impact on the exits as well. These factors, as we all know, have a negative impact on market in general, and more so on private equity and venture capital. So let's start by reviewing the private equity, and I'd like to start reviewing by the exits. And why exits before AUMs and fundraising? Well, exits drive the realized value, and there is no better proof for investors than getting their money back. The chart on the left shows that as per our data, we saw almost US $78 billion worth of exits, and that is a record high. As you can see, it's a record high since 2016. And this is because valuations were generally good on the back of strong public markets. This dropped by about 23% if you follow the green line on the chart on the left. What we saw was the drop in the number of exits was much higher, and that's represented by the bar chart, which saw almost like a 50% decline in these exits. Some of the notable exits that we saw in 2022 in Asia were Australia's Afterpay's buyout by Block Inc., in India, KKR's exit from Max Healthcare, and Actis Investment exit from Spring Energy, both via trade sales. When we looked at the same data for India, and it's not here in detail, but the blue portion of the bar or black portion of the bar at the bottom represents India, we saw that the number of the deal value and the number of deals both saw quite a sharp increase, about 50%, though from a record high base. For context, in 2021, India saw exits worth US $20 billion as per our data, US $20 billion. And that was a jump of over 300% as compared to 2020. And some of the exits that boosted these numbers in 2021 was sale of Hexaware Technologies by Baring Private Equity Asia. We had someone speak about that. And Blackstone's exit in Emphasis, though it was to their own continuation fund. Now, bringing your attention to the chart on the right, normally with the active exit environment, more cash is distributed to the investors. If I follow the chart on the right, the bars in magenta represent the capital distributed, and the ones in blue represents capital called. And the difference is net distribution, which is represented by the green line. And as you can see that APAC investors pretty much have been putting in more funds than has been distributed since 2016. In 2022, however, we saw high inflation. We saw rising US dollar, which had made an impact on the consumption and the profit margins of the businesses. Central banks all across the world started increasing the interest rates to slow down the growth and reduce the liquidity in the market. And this has put pressure on asset valuations and deal activity overall, which has led to a widespread risk of sentiment in the market. And as you can see with the graph, we clearly see the trend, reversal in the trend, both in terms of the net cash distribution, as well as overall decline in the capital called as compared to 2021. indicating that investors are not really rushing this time to put their money back to business. When we looked at the similar data for India, it's not on the slides. What we see is that capital called in 2022 still is showing a positive trend, indicating that fund managers are still seeing opportunities in the market. Coming to fundraising now, similar trends have been seen in fundraising as well. So globally, private equity funds, they raised about US $560 billion, and that is 20% below 2021. Asia, as we can see with the bright orange arrow on the slide, was much harder hit, with the fundraising falling by almost 50%, and that is mainly coming from China-focused funds. To give you guys the perspective, China-focused funds, they were able to raise less than 10% of the capital as compared to 2021. Can be clearly seen with the pink portion of the bar chart, which is almost non-existent in 2022. We did see a decline in India-focused fund as well when it comes to fundraising, to the tune of almost 50%. And really the only funds that saw improvement in or increase in fundraising in 2022, as you can see with the bright blue portion of the bar chart, is the Pan-Asian funds, where essentially the fund managers retain the flexibility of investing across multiple markets. In addition to the overall value of the capital raise, we also saw a decline in the number of funds closed, and that's represented by the line chart on the graph. And what we see is larger funds are increasing their market share. As per our data, 10 largest funds that closed in 2022 accounted for almost 68% of the capital raised. Okay, coming to the performance, I think everyone's favorite topic, even though I'm hearing that we don't have a lot of investors here in the crowd. You know, it's a difficult data to get, and I heard a lot of fund managers talk about disclosures, governance, etc., with the founders in the company space. I think it's about time we start thinking about that in the fund manager space as well, to make you guys more comfortable disclose your performance data. I'll try to give you best of what we have here. On the left, what we are looking at is the performance of funds in Asia, Europe, and North America across different fund size quartiles. I'd like to bring your attention to the black portion of the bar chart that represents Asia. And that's showing that smaller private equity funds have had the highest returns across different size buckets. If you can see, funds in the first quartile in Asia almost returned about 16%, which is higher than other regions, while the funds in the fourth quartile, towards the end, they return about like 12% returns. If you see that trend here, it's completely reversed for funds in Europe and North America, where we see much larger funds offering much higher returns, substantially higher returns. Now, the outperformance of the larger funds in North America and Europe can be attributed to multiple factors, such as access to better deal flows, skilled workforce, and generally broader resources for data and research. Asia, on the other hand, is a fragmented market. And what we see is smaller funds are actually able to offer more by focusing on niche sector and strategies. Looking at the chart on the right now, we are showing the breakdown of deal level performance data into sectors, and we can see some sectors are already showing signs of reversals. I'm referring to the line chart on the top in purple, which is information technology, and healthcare somewhere in the middle in the bright blue. And these are two of the most active sectors in private equity, as we all know. However, we do expect to see a bit more of this impact in the subsequent quarters, given the way public markets have performed since then. Coming to deal activity, a slight optimism here. Despite the challenges in the fundraising, exits, what we are seeing is deal services, consumer discretionary, raw materials, and natural resources. And what we are seeing, though, is there has been decline in information tech and healthcare sectors, and that's totally in line with what we've been seeing in the public markets, also kind of aligned with the performance reversal trend that we just spoke about. I'm pretty sure all of you are now interested in knowing what are the investors saying about all this. Preqin conducts an exclusive investor survey twice a year, and what I'm going to share about in the next 2 slides is the results of the investor survey that was conducted in November 2022. You can clearly see that investors actually consider exit environment as the biggest challenge to private equity in the next 12 months. Asset valuation comes second. It's been quite high on the list for some time now, as you can see. However, in the past, the concerns were around because of the intense competition in the market, and this time it is driven by concerns on asset valuations falling. Rising interest rates, stock market volatility, geopolitical landscape towards the right, they continue to be issues on everyone's mind. In the same survey, we asked about the expected capital commitment to private equity funds. And pay attention to the bright blue portion of the bar chart on the right, which represents investors actually looking to increase the allocation or commitment to private equity funds over the next 12 months. And this proportion has fallen almost to 30% for the first time in the last few years. So there is still a cautiousness amongst the investors before putting their money back. In addition to the above challenges, right, that we've just spoken about, another important consideration that might be holding investor back is the denominator effect, essentially where, because of the devaluation in public part of their portfolios, the allocation to private equity can look higher or even go beyond their allocated limits. As per our data, almost a third of the investors were actually over-allocated towards the end of 2022. In terms of overall, the investor sentiment, as we spoke about, is quite cautious. And if you look at the black portion of the bar chart on the left, 60% of the investors are actually expecting their PE portfolios to perform worse in the next 12 months. Globally, US remains the top choice for private equity investors because of just the size and the maturity of the market. But if we look at the emerging markets, and I'm referring to the chart on the right now, we see quite a remarkable shift in appetite towards China, or rather lack of appetite towards China. Investor interest is shifting towards Southeast Asia and India. It's worth noting, though, these are much smaller markets as compared to China. They're also relatively younger as compared to China when it comes to private equity investments. Moving on to venture capital, which accounts for 40% share in Asia and close to 50%, 40% share in India and close to 50% share in Asia overall. And it's kind of a subset of private equity, as we all know, so a lot of themes that we've just spoken about will also apply here. And this time, we start with the performance. Why so? Because performance is really, the returns is really what attracts investors to venture capital, that is its high returns. The chart that we are seeing here is from the report that Preqin publishes twice a year as mandated by SEBI in association with IVCA as one of the appointed benchmarking agencies. And what we are looking here is the median IRR returns for India-focused funds over 2013 to 2018 vintage. And we see venture capital, which is represented by the green bubble on the top, right, takes the top spot, closely followed by private equity. No wonder these are one of the 2 biggest sectors that we see, asset classes that we see in India. Now, globally, venture capital fundraising, they started off actually quite strong in 2022 before hitting a record low in Q4 of 2022. However, in Asia, we started seeing the signs of struggle very early on in Q1 itself. And overall, Asia closed 32 billion in 2022 in terms of fundraising, a decrease of almost 45% as compared to 2021. For India, the story is different. I'd like to bring your attention to the text boxes in purple on the slide. As we can see that India-focused venture capital fund actually reached all-time high, and they were able to raise close to $5 billion in capital, which is about a 20% increase as compared to 2021. And it clearly indicates that the investors or fund managers continue to see opportunities in the market. Another market that really saw increase in fundraising was Southeast Asia, where it actually grew by 40%, but it's still below India, quite below India in absolute terms. So India is definitely the market to watch out for. Okay, looking at the venture capital exits now, it's similarly challenging to private equity, and we've seen the deal value as well as the number of deals. Both have recorded a steep decline, reducing by almost 40%, and that is because of the reduced exit values and literally a significant or rather shutdown of the IPO market that we have seen. The spike that you see on the chart in Q3 is actually coming from China. What we have not seen yet, worth noting, is the write-offs. The green portion of the bar chart represents write-offs, and you can see we did see a lot of them in the past. Somebody talked about very low returns for the markets, alternate market on the panel. But this is something to watch out for, because it's been all over the news. There's a stark increase in employee layoffs in the companies in the startup space, as in the recent months as founders struggle for funding. So this is something which should all be watching out for in the coming months. The deal-making environment follows a similar pattern, and we have seen decline in both deal values and volumes since 2021, though a much larger decline in the deal values. Again, arguably coming from the very, very high base in 2021. To give you all the perspective, Asia venture capital deal value grew actually by 88% in 2021. And we have corrected about 40% in 2022. So it's not that we have hit the record high, but yes, it's a decline. It's also because there were fewer larger deals that we saw across the board, and average deal size actually came down to about $13 million, which is similar to pre-pandemic levels after we hit a high of $20 million in 2021. In terms of the number of deals here, in Asia, we saw 26% drop in China, and that's the steepest that we have seen in the region. Venture capital deals in India only declined by about 11%. Southeast Asia was flat. Korea actually grew by 34%, clearly representing the pocket of opportunities. In Asia, as we all know, Greater China is the mature market and still has the largest average deal size. However, India and Southeast Asia are catching up pretty fast in the recent years. As we saw in 2021, there were some big deals that came out of the region, like Grab, Flipkart, J&T, etc. Overall, despite the reduced deal values, if we look at the number of deals, and that's represented by the bar chart, that could be a good way to gauge market activity, as it's kind of a leading indicator of pipeline of potentially large values later on. In terms of the exits now, India market is second to China when it comes to venture capital deal flows, though still relatively small in size. And even though overall exit value has declined significantly, which you see from the line chart, the number of deals have remained almost at the same level as 2021, with really a robust activity that we have seen in the trade sales, which is the bright blue portion of the bar chart here. However, we do expect the GPs will be extending their holding periods of assets in line with what we are seeing in the public markets. Deal activity, VC market in India remains buoyant in that, and we can see it's a minor decline about 11%, and it is supported by positive fundraising. In terms of the sectors, you can see information technology and consumer discretionary towards the bottom in black and pink stand out. And that's kind of in line with the structure of the economy, right? That's in line with where we see the most opportunities. Bringing you back again to what investors are saying, and as with the private equity market, we expect venture capital to remain in the adjustment periods as investors look at their performance of the portfolios. From our investor surveys, majority of the investors in venture capital are expecting the performance to worsen over the next 12 months. And the denominator effect is also a concern there. The sentiment overall is quite cautious. when we look at the, in terms of the markets that are showing interest, right, we can see that investors are targeting markets in Asia more than ever before, and they still increase in the appetite towards India, as you can see from the chart on the left. What we also see is a clear interest towards early stage, referring to the chart on the right now, where venture capital, and this shift makes a lot of sense given the risk of sentiment that we are in right now. Asia, emerging markets, early stage, these tend to be smaller ticket sizes, and especially for early stage, they are more insulated from the market volatility, given the longer term exit time frame that we have, and managers can focus on grooming the portfolio of the companies without getting too distracted by what's going on in the in outside market as such. Overall, our long-term outlook on venture capital remains positive. We expect venture capital to outperform the other asset classes in AUMs, in fundraise, as well as performance. Especially in performance, we see APAC with better potential given the wide range of opportunities in India and Southeast Asia. Since we are on the topic of venture capital, I want to share about a company intelligence offering which can help investment teams and the M&A professionals to streamline top-of-the-deal funnel activities and searches detailed profiles on the companies. And I'm quickly getting a lot of signals with this gong ringing in my head. I'm going to wrap up with the mega trends or what we see in the market. Overall, we will be seeing positive growth in AUMs to continue, but at the slower pace than before. And as you can see, exits slow down, fund holding periods will be extended, and funds will stay under management for longer, helping the AUMs. Fundraising expected to remain soft because of the risk of sentiment and denominator effect. Long-term investors should come back given the diversification benefits and higher returns that they get from this market. Short-term, again, performance to be impacted with valuations, borrowing costs, macro headwinds, we've heard enough about it. And finally, we did hear about funds of funds yesterday, and since we're in the slower exit environment, liquidity will be a theme both for LPs and GPs, and we expect a lot more activity in the secondary transactions or continuation funds. A lot of you were taking pictures of the slides. You don't have to. We have created this pack especially for the attendees of IVCA. You can scan the QR code to read up more about our research on alternatives in India, including the slides from today's presentation. Thanks everyone for your time. Look forward to chatting with you during the networking sessions.
Thanks, Geetanjali, for those insights. I would like to quickly call now